What's going on, everybody? Good morning, good evening, good afternoon. We got people tuning in from all over the globe. Happy to have you here this morning for a deep market analysis. I got my friend here with me. I'll be pulling on, I don't know what he wants me to call him, Deputy Shredz, Zenkai Mindset. I'll be pulling him on in a moment to do our bi-yearly sentiment check on the markets and get a gauge for where we're going into the future here. So we're going to start the stream out a little more zoomed out and talk about the macro. Maybe touch on the S&P, what the dollar's doing, look at Bitcoin and Ethereum, and then zoom in here to our little RH ecosystem to see how we see things playing out here over the next 1 to 2 years. Happy to have you back, brother. I'm bringing you on now.
Hey, good morning. Good morning.
What's going on, man? It's been about a year, I think, almost since we last did a stream. We did a couple of them in January. We might have done one in February. And at the
Oh, wow,
time,
it was that long ago, wasn't it?
I think Hex was bottomed, and we were like saying, "Hey, pay attention. This thing's going to go up a little bit here."
That was
And then
before pulsechain launch, right? Yeah, that was right before it ripped up to like 10, 12 cents, I think. Yeah.
I'm pretty sure we were streaming
Mm.
the Hex Bitcoin chart
Yep.
around that bottom, saying, "Hey, it looks like something's going to happen here around the infamous January 5th date." Which we can dive into a little bit later on in the stream, and how that tends to be a very interesting time for the Hex price action.
Yeah, well, a lot's happened since then with interest rates, right, with the Federal Reserve. Things with the macro picture continue to evolve, and we're finding ourselves in a position where a lot of people are either coming to grips or not coming to grips that enough time has passed for prices of just in general assets to start heading back up, whether people want to agree with the news that support the prices, right, is another thing entirely. But this has happened plenty of times in the past where crypto specifically too has gone up when things have not been great outlook wise, right? Either geopolitically, either with maybe a virus of some sort, right? All that good stuff. So it's going to be interesting to kind of recheck on where everything's at, because 2024, 2025 are going to be probably like the bombshell years. We'll get into what we think might happen. But I think if there is going to be moves, it's going to be here in the near future for crypto.
Yeah, did you want to talk a little bit about that Fed interest rate pause and kind of how that's looked in the recent past?
Yeah, right. So they go through cycles. They'll raise rates and then they'll go into a pause, and then inevitably bond market and the stock market, et cetera, price in kind of when those rate cuts are coming, which typically signify something is systemically wrong, right? Either a high unemployment rate, or there's some sort of black swan event that happens, right? Maybe a break in the banking system, like what we saw in 2019. That was then led after that by COVID. But the point is we are in the pause cycle, and it's been interesting kind of hearing the verbiage, right? Because that's a lot of how they jawbone the Federal Reserve, right, to kind of help keep the markets in check, if that makes sense, right? And it's been interesting to see the markets go basically hog wild and love what Powell's been saying here. Now, whether or not they actually do cut rates, which is kind of what the bond market's pricing in, I think it's anywhere from like 50 to 75 basis point cuts in 2024. I think
Yeah.
doesn't really matter. What does matter is we're in this market melt up situation where, again, it's going to just continue to confuse people, right? Because things are starting to deteriorate and become more obvious that things are worse on like a layman's level, right? The everyday person is starting to become ever more aware that inflation is a real thing and that their purchasing power has been eroded and they can't afford things anymore. They're getting laid off. And that kind of confuses the retail person, I feel, because they don't understand that doesn't mean that stocks can still go up another 20 to 60% in 2024, right? So we're in this weird position where you want to look historically and go, okay, how long do pauses typically last? Well, they're usually around, I think, 6 to 8 months typically. And then what typically happens over those first 1 to maybe 5 rate cuts? And what's the velocity of those rate cuts, right? 25 basis points, 50, 100. And then, what usually happens thereafter. So I think if we can position ourselves with what that narrative looks like going into 2024, we'll have a good idea of, I think why people should start to disconnect more and more from the news cycle, and the fact that things can go up even in light of an environment that's not super helpful for a lot of people. It won't typically align, actually. It's like things are going to get better as prices get better. That's like never the case, but it feels weird mentally for a human to disconnect from that.
Yeah, I just wanted to quick draw attention to something that we talk about a lot. These are the pause periods that we talk about where the Fed lowers or stops raising the cost to borrow money, which changes the entire economic system because the bank lends money to you at a certain rate, but they're getting it from the Fed at a different rate. It's cheaper for them to borrow than it is for you to borrow from the bank. So as rates go up, the cost to borrow money goes up, interest rates go up. It makes people less eager to act in the market. For example, real estate inventory comes down when rates are going up, especially coming off of like historically low levels, because who's going to want to sell a house on that has like a 3 or 4% interest rate to go into a mortgage with a 7% interest rate? You're just not going to. And so that's what causes these inventory freezes in the real estate market, for example. But when rates start to drop, that's when prices do this melt up phase shortly. Like for example, here I have an orange, the stock market. When the S&P went up, when rates came down, it was just at this critical juncture where rates immediately went to zero. Effectively, is when you saw that big crash around the COVID time, right? So it's kind of nuanced. It's nuanced in its approach, but what we see happening is this pause and then a gradual decrease in rates over the next year, potentially 50 to 75 basis points, which would mean that the stock market was going to continue to climb as risk remains on. And that is ultimately really good for crypto as well. It's good for the bond market to resituate it so that people are thinking that the Fed's got things under control and they can start to go longer on bonds. The short end of the bond curve then comes back to normal. And in that process, the dollar actually comes down in value. So I'm going to switch to that chart now.
It was good that you pulled that up though, because there was a large run on multiple occasions when they were pausing rates as well as beginning to cut. I think people have really gotten in their head that the second they cut means that everything just immediately crashes. And there's always this lag in the system, right? For money to move around, for markets to move around, right? Capital flow. And it's likely you're not going to see this big, huge systemic crash the second you see an actual first planned rate cut, right? It'll probably be small, maybe like 25 basis points. So the point being is you could see people just frustrated wanting the short, just getting crushed because they just continue to go up and the market remaining irrational, if you will, for a bit longer. It could be a quarter, it could be a whole year, right? All of 2024. But that's been a pattern we've seen a number of times. I think people are really starting to forget that going into this year here.
Yeah, I'm with you. And 100% that, this is the total crypto market cap in orange and then the dollar in green. And you can see that there is a clear negative correlation. When the dollar rises, crypto crashes. When the dollar crashes, crypto rises. Dollar crashes, crypto is like, this is basically the inflection point here where there's a battle for dollar dominance. And this is the final gasp of air before, now dollar's crashing, crypto is rising. So now that this cross has occurred on this particular setup, it depending on the time frame, it changes. But net, when you zoom out far enough, crypto's just going up against a falling dollar forever. But inside of these tiny time frames, it's fun to look at kind of these inflection points where the dollar is actually going to tell you what's going to happen ahead of time. You could take this analysis a step further, and this is what I do for my members, is this was actually happening in the oil price before it was ever happening in the dollar price. So if I look up crude, WTI, where are we at there? Let's see what that looks like. So you see how crude oil crashed first, then the dollar crashed? So crude oil is so closely tied to dollar dominance that it kind of signaled ahead of time, right? So again, crypto falling, dollar rising first, oil fake out and then chase dollar, then just couldn't hold it. Oil crashes, dollar sputters, oil crashes a major leg down, ABC correction, dollar follows oil. But at this whole period, crypto bases out as the dollar just doesn't, it's not for crypto to like tank here, dollar had to go parabolic, and it didn't. It got stopped out at this key level here of 105. And so this is all in this chart. You got 3 data points here. You got crude oil price, dollar price versus other fiat currencies, and then you got total market cap. But this has all been pretty clear since this blow off top. I give credit to Kareem Majito from the Hex community. He saw this blow off top right away. That this parabolic advance had broken here, and it was it. And we were calling Bitcoin bottom here back in November of last year. And so it's been in the charts the whole time. People look at the day to day and here and don't know what's going on. But if you zoom out and you look at these macro perspectives, it really kind of gives you a lot of solace, and you just feel good about where you're positioned. So I think that pretty much covers the macro. I think further downside is going to happen for the dollar, and I think crypto is going to continue to rise. However, in the short term, medium term, it remains to be seen what happens with Bitcoin in terms of when it's going to retest its 30K support level to test that structure, because that's a really key part of saying how this next year plays out. I don't know if you had any comments on that particular thing.
Yeah, I would say the only thing to point out that oil usually leads the dollar because it's one of the best indicators for demand destruction, right? The cure for higher prices is higher prices, and oil usually tops and then will come down as an early indicator of a recession coming in, because people are just driving less, spending less money on gas, right, as the price goes up. And you're just continuing to see that price fall. Eventually it'll stabilize, but notice the dollar always kind of followed it. And there's also that parabolic run up in oil too. I think it's a little bit more erratic than the dollar, but yeah, I agree. I saw a post from Kareem too. And I think a lot of people had that parabolic curve charted out on the DXY. And then once it broke, it was just a matter of time. I think there's so much disbelief. This rise of the dollar was so strong, and it just ruined people for now 2+ years. People are really just traumatized, and they don't think there is a future where prices could ever go back up again. Seriously, there's so much disbelief rooted in people's psyche, I think, right now, more than there's ever been. This has been the worst bear, not even just for the Hex ecosystem, just in general, right? If Bitcoin goes up to 100K, we'll say, and comes back down to 30 to 40, you just round trip 5 years. That is the worst performance Bitcoin has ever had since its inception. That is going to ruin people's psyches, right? So there's different levels of difficulty coming into the picture now from a psychology standpoint, not just the charts, right? People literally don't believe the prices can go back up anymore versus a new, fresh 17-year-old who hadn't sat through this and is thrown in his first 10 grand.
And I think that's kind of where crypto's at, right? Is like people that have lived through the last 10 or 12 years of markets are kind of have a totally different perspective of how these things move than like OG market watchers from like the 80s and stuff. I have, the contrarian famously helped me, get me into trading and understanding the market from a macro perspective. But his analysis has been wrong the whole time, because he's coming from a perspective that's outdated when money policy was a lot different. The conditions were a lot different. The economy was a lot different. The technology was a lot different. The internet wasn't as prevalent at all. There was no internet. And so like these are outdated mindsets from a lot of the boomers and back. And so the way they see the market and the way a new new participant coming into markets today see the market and think of what's possible is completely different perspectives. And funnily enough, it's the younger generation that's going to dictate where these things go in the future, because they're the ones that inherits all the wealth. So anyway,
wait, real quick, I want to piggyback off that onto something, because you have the SPX up here, and I think it co-aligns nicely with what you just said. If you look back at every crash, right, even going back to like the 1920s crash, right, or the dot-com bubble, notice every single crash has been a smaller drawdown and has been more of a V-shaped recovery. So we've had less and less of a depression era-ish crash every single time something has happened. You even just go from .com to 2008 to
here's the whole thing.
Right? Yeah. And you can see the V-shaped recovery continues to get quicker and better and smoother. And the time horizon gets better too. Right? Like notice the psychology cheat sheet doesn't apply anymore to the stock market. Right? Because they won't allow a 90% drawdown to happen in the stock market. They just can't. So what you got to understand is with the new systems that the Fed has, and people expecting this big deflationary environment to hit where everything just tanks in value, right? They're not going to allow that to happen. That was a 1920s thing. And if that does happen, again, me and you were joking offline here about we're going to be caring about what farm we're going to make and what foods we're going to be planting, not what the Hex ecosystem is doing, not, whatever's going on in the internet. Like there are some serious issues. Nobody's caring about their portfolio if that happens. But if you look at these drawdowns, look how everyone is continually get better, if that makes any sense, compared to the last. And it's likely that this next one, whether that's in 2025 or beyond, and I could be wrong on that, right? Maybe they do finally let it all come down at some point. You just can't plan for that because so far planning for that has gotten you nothing but wrecked and missing out on price performance.
Yeah. Vibra says everyone needs to watch The Great Taking by David Webb. It's okay. So it's a history lesson on what Alan Greenspan did to the monetary system. Okay. So yeah, I mean, look, we've never really repeated this 85% crash from the Great
drawdown,
from the Great Depression, right? And lots of fun things come to mind to want to talk about. And if I could spend here endlessly talking about everything I wanted to talk about, we'd be here forever. I think the quickest thing I can say is this is what the early days of crypto, in the equivalent, right? Like the stock market was still just in a different place. Think about charting back then was on pencil and paper, and there wasn't even a real good universal system for doing it. They would draw like lines like this, and then each one of these would represent time down here, and then they would just draw O's and X's in there like this to create price charts. So I mean, matter of fact, I'm pretty sure with TradingView you can actually do point and figure charts. Maybe on like a weekly or something. Yeah. So
wow,
this is like, let's do daily. So this is what they used to do. Point and figure charts. It's just a completely different system measurement. So let's just say this: charting in markets has come a long way. And what I'm scared of for crypto, just looking forward, is the volatility getting zapped out of it. So yeah, there's a lot of people that gets wrecked during these phases, but that's also where the opportunity is and where people like you and I can actually become generationally wealthy. The more they zap out this big downside is the less of a chance you have to make money on the upside. Because if you're just in a long position and they squeeze the volatility out forever and it just gets flatter and flatter and flatter, you have to spend a lot more time waiting for the return. And I think this is kind of where because here's the thing is like if you're denominating your world and this is going to get into the crypto, if you're denominating your world in dollars, it's a lot different than if you're denominating it in like something that actually performs well relative to the debasement of your currency or the inflation rate. So if I pull this up, S&P against like BTC USD, it'll show you kind of what I'm saying, which is like the S&P, if you measure it against the Bitcoin price, it hasn't performed very well at all, really. It's down 99%. And so you want to get into things that's going to stay volatile. But here's what's happening is over time, Bitcoin is getting so big now that the volatility is getting taken out of it. And so what we're here for is we're here for the gains that you're going to get in other places. And DeFi is really the next great bastion of hope and opportunity for crypto participants and really for the markets at large, because there's still enough illiquidity there and opportunity there. But anyway, anything to say about that as we get into Bitcoin here and kind of look at this cycle as it plays out over the next few months and how it could maybe affect us?
I don't want to dive too far because then we can get into like, BlackRock manipulating things with the ETF and like you said, zapping out gains in a multitude of ways, right? The S-curve adoption's gone. You don't have enough money to move Bitcoin the way it used to. So the gains are going to be diminishing in general. But yeah, I totally agree. I do think that's going to happen. And everybody I think is becoming more clever and aware of that as they move off of Bitcoin and Ethereum and into like these other projects that are really that last bit of hope, I guess, for a lot of people to make those bigger 50, 100,000, 10,000x gains. Because yeah, I mean, Bitcoin is going to be a boomer city, already is, and But I don't think that's necessarily a bad thing. It's just that's the way it's going to go, right? It's old tech.
Yeah, if anything, it's good because it stabilizes the base unit of account. If you're measuring everything in Bitcoin, it becomes pretty easy to beat Bitcoin if they zap all the volatility out of it, right? If it just holds stable value at $100,000 one day, well, then it's going to be pretty easy for our little altcoins to move against it. So it's actually kind of there's a silver lining there. But yeah, over time you can see here how volatility for the most part has just shrunk down on Bitcoin. So that's kind of like your resistance line there. And so what are you going to get out of this next few months for Bitcoin? Maybe is a big pump up to like, let's say the next 6 to 9 months. I would expect Bitcoin to do one more gas for air higher, and it could be a big move or it could be just 48K, and then it turns back down, and we're going to come back and test 32K ish area, because you got to keep building on that market structure. And that's, if you look back at the best Bitcoin bull market ever, it was here in 2015 where the price came back down to test each key level on a wick at a minimum. Let's see here, do like a candlestick chart. So in all cases, it does come back down to test each level like a staircase, because it gives big players more time to recapture a better price, but still keep the bull run intact. And so this is 1, 2, 3 stair steps, and then the stairs start to get shorter, and then there's a next leg up, and then it starts to go parabolic, right? And so where we're at here is somewhere around this level where I'm expecting this thing to either this is it and it comes back down to test 32 now, or in the next few months you get one more push up, maybe going into April, May, and then it comes back down hard. But it could be a bigger move. Like it could move all the way up to like 60K triple top and then find its way coming back down to here to 30K, and then we have to build out market structure for a bigger market cycle going into 25 and potentially even 2026. If you look into Benner cycle theory, it supports this argument, right? That Bitcoin's going to have an extended cycle and that things are changing, right? This isn't the typical, we're not getting these blow off top types anymore. Now we're getting these like A, B, C corrections. Then we're getting like double top, double bottom. So the structure of the chart on these longer time frames is changing, which means that it's not going to act the way you think it's going to act. So for me to even put up this 2015 parabola, it's just saying this is how things have happened before, but expect for there to be a twist in here at some point. And as you know, Ryan alluded to, it could be the ETF launches and it's a sell the news type of thing.
Yeah. And the opposing viewpoint on that is that this has been printing a flat top correction, and that this is actually the final wave of the bull cycle, and the first double top was not the final wave. That was a flat top correction. And again, I think the narrative so far, which everybody has to agree with because that's what the weekly chart has been printing, is that this run has been powerful. It's moved exactly when it's needed to move, and it has not given people a chance to buy easy pullbacks. You've just been left behind every time. And the only people right now that are happy are not the bears. They're just the people that have been buying along the way, because there really hasn't been an obvious yet, right, pullback to some key level support, 20, 40% drawdown, where it's like, okay, yeah, this is everybody's chance to hop in. I'm a little bit more bullish. I think the next 2 to 4 months is where Bitcoin, Ethereum for sure, especially Ethereum, is going to move, and it's going to leave more people behind in this rally. Whether it hits 60K or 80K, either way, it's going to piss people off because so many people are sidelined. And I do think it will have the power to move above 60 because of people hopping in at the end, going, all right, we've sat this one out long enough. We have to capture some of this move. And you're going to be seeing people come in because there's still so many people sidelined in stables. They're still in this like really traumatized disbelief scenario, which again, I can't blame them. It's been a really rough go the past 2.5 years. But I do think you're going to see a lot of people hopping in at probably the worst time, right? Bitcoin around 45, 50K. And that's just going to be the worst time. And to your point, 60K, 70, 80, does it really matter? It's not blowing off above 100, most likely, right? That's kind of what we're alluding to here and getting at. But the point is if you do want to be a part of this move, if this is going to be a move of Bitcoin, Ethereum, our ecosystem, right, all the altcoins that are levered plays on Ethereum, there is going to be I think, a good amount of opportunity over the next 6 to 8 months. I think you'd be silly to not at least think that there is going to be some strong opportunity coming.
I'm with you. Let's look at Ethereum. This is really true of what you just said about Ethereum, where it has given you no sign of anything. It's just
1 week. That's it. Look at that wick on that, and like even then, like that's a capitulation wick that scares people. Not a lot.
I mean, this just doesn't make sense from like a. There's no falling wedge here. This is just trading in a channel, and then boom. There was no.
There's no good news. Like it's been nothing but bad news, right? The price has been moving well before any good news. The price has gone up so much.
And I just was watching like a Richard stream recently, an old stream, where he talked about how during this period here, Ethereum's bear flag was like going like really up to the upside, and Bitcoin's was more like doing one of these and a little more sharply. And it's like you can see in this chart the demand for Ethereum in here. Especially there's real demand, and I know it's small and it's nuanced, but like ETH bottomed here at 890, 850, and it never looked back. And when you measure them against each other, this period, I'm gonna pull up while you're talking. I'll pull up Bitcoin with it so you can see. But I mean, it's clear that ETH is let's put it this way, that EVMs are the future, and there's even like civil wars going on in Bitcoin again over like how the future of the network and stuff, and ETH is just building day by day and adding, and it's going to bring on all these upgrades.
There's growth in the network, right? Bitcoin does not have enough utility to do that, so it becomes more like a gold manipulated, lower price performance. It's still going to be good, right? But you're going to get more of that gold-esque attitude, right? Especially when you have paper Bitcoin being traded essentially. And I think the one thing people forget about, you should show the time frame of how long we have been in this bear market and how long accumulation has been going on for. People are still treating these assets like they've been sitting at these price levels for 2 to 4 months. It's been 2.25 years now, guys, right? And we've had a lot of bad news come in, wars in multiple areas, right? We have an election year. There's so much coming in here, and people are just forgetting that enough time has passed. Nobody noticed that conversation hasn't been had. Hey guys, you know what? Maybe just enough time has passed for the price to just start moving up because people are ready. New people are entering the system. New money's coming in. People who've been sidelined and afraid are finally starting to buy. Enough time has passed. These wounds from FTX and all this shit, right, that marked the macro bottom, and we're moving on from it. Doesn't mean there can't be more drawdowns, but again, you've noticed the narrative so far has been the pullbacks haven't been worth people's time to get in from a trading and technical perspective. So they keep leaving people behind. There's a lot of people in stables right now going, I really hope I get a better price. So if Ethereum goes up to 4,500, I mean, good luck. You're chasing it there now. You know what I mean? So enough time has passed. Like look at the time horizon on that, and then compare it to other bear markets.
Yeah. So this is 1,000 days. It's 966 days from the first top, 777 days since the second top. Bitcoin, here you can see from the low, and these are the low price points for each day. Or from each week. Bitcoin has been underperforming ETH all up until October of this year. So October 23rd, finally Bitcoin started to peak out. I mean, now Ethereum's got...
It usually does for a short period of time before Ethereum just rips, right?
Right, and we'll see this we'll see this period here really show up in the ETH Bitcoin ratio in a minute. But yeah, if we zoom in back and through history, let's see, the last bear market was... I'm just going to use Bitcoin, 819 days. So it's a little overdue from the first top. It's somewhere in between, right? So 819 versus 966 and 777. And then going back even further, this was shorter. Well, no, hold on. This is, I'd have to pull up a different chart. Let's see.
Oh, yeah.
But anyways, my point is that, yeah, when you measure, they're all about the same. The bear markets have been about the same. This is starting to push into, bear market was over here, right? So right here. So it was really only a 378 day bear market from this top to this top, and 567 days from here.
Bitcoin did that huge retracement, and then the COVID crash happened, which was a very weird event, which you could count that the end of the bear. I think that was more of a capitulation candle where such a small amount of people captured that, right? Most people were accumulating well above 5,000, and it's been such a small amount of time there. Like, look at the weekly chart, barely spent any time there in that COVID crash. And look at the V-shaped recovery. That was not like a 3 to 6 month period we spent in a range. That was really that bottom there, which is much, much shorter, right? From a technical perspective. And again, the Fed is removing more of those V-shaped huge crashes in the system. So people expecting that to happen again, I just don't see it happening. You're also not going to get the big blow off top gains in Bitcoin anymore either, right? We talked about that. It's kind of a give and take.
It's kind of funny. This is like just right on schedule. Like this blue curve.
100% it is. Yeah,
This
look at that.
it just overperformed last bear market.
And we
in 2019.
underperformed this time around. So people are like,
And
oh my God, it's up 2x. Like, this is so crazy. Not really, guys. Like, this is all according to what normally happens. I really think it's the psyche of people is so much more damaged now, man. So much more damaged. And that's what's causing us to view things just a lot differently here. Now, I think it's fair to be careful on the gains being less this cycle, right? We're not talking about that. We're just talking about time horizon making sense for prices to begin moving up, regardless of world war, regardless of narrative, regardless of the news cycle, because you can't go off of that. That's why Richard Hart always quotes time frames to shake out weak hands. He doesn't quote, oh, well, when the news cycle is done, then the prices can go back up, right? He doesn't say that. He goes, enough time needs to pass. And we're just there. It's just people are not wanting to admit that and not wanting to put skin in the game, right? Which is why I think you're going to continue to see these situations where the price takes off of people, because you have a bunch of influx of people going, well, it's now or never, and it's just going to keep going up without me. So you have this weird trading setup going on the charts for ETH and BTC that just are not making any sense.
So here we have the ETH Bitcoin Giga pennant, and
It
yeah,
held. It held what it
so
needed
far
to.
it's holding, yeah, and its target is ETH is going to overperform and run up 50 to 60% against BTC. So when that starts to happen is when you can expect altcoins to really start to fly. And I mean, we're running out of time, guys. Like, there's only 91 days left before this thing really has to start to pick up and get moving. So I mean, this kind of leads into my hex analysis, which is that get ready for like one of the most amazing parabolic runs in hex history. Like, maybe it'll even rival the beginning when we had that first 99% drop, and then the rip all the way up to like big payday levels. Yeah, on the back of a strong Ethereum. And why am I spending a lot of time on Ethereum right now? Well, because Hex is built on Ethereum, and that particular chart is showing a lot of strength, right? So when you zoom out, well, here it is against ETH, and so you did basically what you're doing is you double bottomed here. You had the low, you had the Alex whale pump it up, it's coming back down to test. It made a higher low, and this is like strong consolidation right here, and absorption of supply. And we just had a breakout against that cap. Now we're just retesting that level right now. So if I go to the USD chart, you can see how the dollar price is just consolidated underneath that 111 moving day average, which is significant because that's how we measure the pi cycle based on the 111 and the 350 day times 2. And so when you look at, for example, Crispy Man's GRM indicator, let's look at it here on Bitcoin. This purple line usually tells you when the parabola is going to break and the market cycle peak. You can see here in 2017, it broke here for Bitcoin. And then at the bottom, you had a reversal, a V bottom reversal on the GRM. And then again in COVID, you had a double V, double bottom, and then a V-shaped reversal. And then we came up here. First crack of that parabola broke. And that was like the reversal pattern there on the GRM. And then the V bottom actually came in right on cue, right before the FTX capitulation lows, which all did to the GRM was slowed it down sideways for.
You notice
like
where it's at right now? Look at the correlation between right now and 2016.
Let's see here, 2016.
Mm-hmm.
Oh, it's right there. Yeah, it's right around before it went parabolic. 11. It was actually November of 16. So yeah, these V bottoms are no joke. And so why am I bringing that up for Bitcoin? Well, I want you guys to see how this thing works. Huge shout out to Crispy Man for putting this together. Let's look at it on Ethereum quick and just kind of see where we're at. So this one isn't as sharp of a V bottom, but it also, Ethereum has held up a lot better than Bitcoin. It didn't crash so far down, and it's just been in a strong like crab but it's been climbing the whole time.
I mean, it's printing exactly what it did in 2019, just with less velocity, less upside, which we've seen that every cycle.
Correct.
You know,
This shape here is probably going to be reminiscent of what you could expect here on the GRM, what you can
maybe
expect.
we stop at like the 0.8 or 0.9 retracement instead of all the way up to that 1, you know, or maybe it gets up to the 1 and the price value is just lower and that's how it's denominated. But either way, like expect lesser gains. But the time horizon and like the patterns, there's nothing that like doesn't paint an obvious picture that we're either moving in 2024 or we're not moving at all. That should be the mindset going into this year, period. If your conviction led you anywhere from hanging on in the Richard Hart ecosystem or even just Ethereum, we move this year or something is systemically so bad that you don't care about your portfolio anymore. That should be your mindset.
And I'm not for that, guys. I'm optimistic on humanity. I think there's a lot of things going on under the hood. I'm going to show you guys something that just it'll blow your mind. So
is it that photo? Because that's really relaxing. It's a nice photo.
Which one?
The one on your browser you had in the background. Ooh, the US debt clock. Now we're getting some really.
So check this out. There's something that's been added to the US debt clock here recently. If you look down here in the corner, money creation, US Treasury dollars. Well, what does that mean? In the US, look at the US money supply, M2. M2 is decreasing. This is going down at a rapid rate. But yet US Treasury dollars is increasing. So what does that mean? Well, US Treasury dollars, it says 2025 USA Treasury dollars. It's a wealth. So this has happened twice before in history. Wealth-based, debt-free, non-interest-bearing money issued by the U.S. Treasury. This happened in 1862. President Lincoln issued $450 million directly from the U.S. Treasury. These debt-free, interest-free notes were known as greenbacks. We all remember the greenbacks. And then on June 4th, 1963, exactly 101 years later, President Kennedy signed Executive Order 11110, issuing $4.3 billion directly from the U.S. Treasury, bypassing the Federal Reserve Bank. And these debt-free and interest-free notes were known as silver certificates. So this is a system that's being put in place right underneath our noses where we are basing our new monetary system on the credit of our nation and not debt owed to some private corporation. So I want you guys to pay very close attention to this. Now, there's rumors going around or videos I've seen that said that these USA Treasury dollars are being issued at a rate of 1,000 to 1 your U.S. Fed notes. For every 1,000 U.S. Fed notes you turn in, you're getting 1 USA Treasury dollar back. So theoretically then, if you bought a $3 U.S. Fed dollar carton of eggs, if you were going to pay for that in USA Treasury notes, you'd be paying 0.003, 0.3 of a cent for that carton of eggs. So it's a redenomination of the currency to try to fix and get us out of this hole that we're in, based on my understanding.
Interesting. I mean, and again, a reminder, if people are really super doom and gloom because the past year has been really rough and they want this big deflation cycle to hit, right? Not disinflation, right? Kind of what we're seeing now, not inflation, but deflation, right? And prices come down quite a bit in assets. It's not just houses coming down, it's cars, it's watches, it's everything. You're going to see insane unemployment. You're going to see an insane crash. Like this is like that big doomsday scenario. If you people think the Federal Reserve has that on their bucket list of things to ever let happen, given the tools that they had in 2020 to prop the system up, as well as new tools they have available now, that's not something I would bet on. Sure, it could be in the bingo card, but again, you're not going to be caring about your portfolio at that point. No one's going to care, right? At that point, just get your health in order and you're going to have a farm or whatever and, you know, food and water and that's that. But me and Axis, obviously, we're not betting on that. We have faith in humanity for that to not happen. We know the system we're in is not ideal, but it is what it is. And that's why we do stuff like this and learn about it so we can better prepare ourselves for these cycles that are oncoming. And I think the quicker people can disconnect from the past trauma of the past 2 years and reconnect that enough time has passed for prices to go up in this cycle. Again, like what's the worst that happens? Bitcoin goes up to 70, comes back down to 35, and then rips up to 150.
Right.
Dude,
which
like
is kind of where my head
bullish
is at.
long term. Exactly. You have to be bullish either way. We're running out of time for prices to be suppressed.
So in terms of cycles, where are we at with Hex? We can look at EHEX first because that was the GOAT. On this GRM, like look, going back to before Godwill stepped in, that it was basically flat for all intents and purposes, and then Godwill stepped in and we started to go up. And it wasn't until the double top around 0.6 that it started to curve down. But again, we had this V bottom recovery on a couple. There's a U bottom recovery here going into big payday, and then a V bottom recovery going into the breakout to 2 cents, retest of 1.7, and then the big ripper all the way up to 56 cents that same year, which is where we had that like rounded top on here on the GRM. So this thing crazily overperformed the 1.0 target. All right, then we crashed back down, and now we had our first V bottom. Inside of there, there's a tiny little W, but for all intents and purposes, that was a V bottom. When Godwill came in and pumped us up, it basically the volatility went to near zero, and we traded between 3 and 3.2 cents for like a month straight. And that was enough to get the GRM to start to rotate back the other way. And then Godwill came in and pumped us up from 3 cents to 5 cents. And then even though prices went down over the next like month and a half to 2 months, it did quickly bottom around 1.7 cents. And then we had that 700% move up to 12.7 cents earlier this year in March, leading into pulsechain testnet V3. And so then the GRM, this isn't as good of an indicator for showing things that are crazy like fucking forks of new networks and doubling of supply and stuff like that. But you can see that this thing topped when EHEX crashed back to I think this is 1.5 cents around that general area. And then you had the SEC FUD, which even pushed it lower. And so then the GRM came all the way back down here over the last few months and set in its first V bottom. It's hard to see because the price is covering it. But let me show you what PHEX looks like. It looks a little more cleaner on this one because a lot of the activity has been going on over there. But you had that top, and then here we go. We're getting our V bottom reversal. So the opportunity is super clear here on this one where it's at the bottom, and bottom, way underperforming everything else in crypto, and there's still so much upside. So anybody that's listening in that doesn't have any exposure, was thinking about sticking their toe in the water here, maybe they should look at this and say, hey, man, like by me getting in down here on the GRM, there's all this upside potential on the GRM before we're even in, where it's been way above red before. So even if your goal is like this gold line area here, which is a 0.6, I mean, there's a ton of room to go, right? You're under 20 here, which is like buy zones. And we'll show you that here in a minute with the Mayer multiple as well. But then to take it even a step further, I think, anybody that held through this fork period here when this GRM rolled over got a doubling of their coins, right? Which is important to show the combined price because this really shows how we made a higher low. Because all you did was you doubled the supply effectively. And so, we made a higher low and it's V bottoming. Price structure here is good. It's in a positive slope. This is the signal, guys. You got a V bottom, it's a higher low. Similar to how we had this one here and then a higher low here. Except we're starting from a lower place, which means the upside's even better this time. When it goes
this for ETH, but further back, or does it only go back to like 2016 on ETH?
Yeah, we have it only for ETH here.
Got it. Okay. I was just curious because look at how the fractal on ETH, which performs very similarly. I mean, I guess Bitcoin probably the better one, but look at how it's painting a very similar.
We could see ETH Classic. Well, that only goes to 18.
Only
goes to 18.
I mean, look at on that gray level there, though. Very, very similar price action and performance there until it moved on its first few cycles. Well, yeah. I mean, not even just the purple. Like looking at the closing price, right?
Oh, down here where it's flat.
Mm-hmm. Like again, people forget we're in our second cycle. And people are, for some reason, thinking that Hex isn't going to do crazy stuff on its second cycle because it's a second cycle coin, when really it's like, what did Ethereum do on its second cycle? What did Bitcoin do on its second cycle? Again, people forgetting Hex is just Bitcoin with a proof of work change. Like it's designed to perform the exact same way. And I mean, I don't know, like Bitcoin's at 1,000,000x to date, give or take, close to it. And I mean, well, I don't know what Bitcoin did on its second cycle, the amount of X's it did, but I have to imagine it was like, what, 1,000 plus?
I can tell you.
I'm curious to see what it did in its first and second cycle. I don't know if anybody's compared to Hex.
I mean, here it is at a half a penny.
So what did it do on its first cycle?
725,000%. 57,000% at second cycle, roughly.
Okay.
62,000 wick to wick.
So that's 620x, right?
Yeah.
Yeah. So, I mean, think about it. A hex doing a 400 to 500x on its second cycle wouldn't be a surprise looking back. If you looked back and compared it and you're like, okay, this makes a lot of sense. But again, telling somebody that hex at what's the combined price on hex right now?
It's like 1.5 cents roughly.
Yeah. So,
I mean, I took the Bitcoin price chart from the second cycle and just mapped it onto here, assuming that 0.5 of a cent was a
yeah,
half
that's
a penny
hex.
was
That's
the
like hex to $6 to $9.
I mean, this is basically, 4 years after the top here, September of 2025, it would have you at $1.37, which I don't know
that's
how
low.
much.
That's low.
Like, so what is that? 0.003 times.
Given what Bitcoin has done, and that this really is truly just Bitcoin with a proof of work change, assuming we see even remotely similar network effect
It's about
growth.
a 450x from the low.
Yeah, that would make sense. Like looking back, if that happened on this cycle and you're looking back and comparing this comparatively going, okay, we're just Bitcoin with a proof of work change. We did a 10,000x in the first move. We did a 400 to 500x in the second. Would anybody looking back go, oh, that's a huge surprise? No. Now that it happened again, people are believing in the system more.
This is what's crazy is like, so this is perfect for you to talk about how the sentiment changes once you start to get in higher prices. That's also where confidence comes into the market and people start aping in with size. They're like, oh shit, I got to get some. Like I can't not have some, and so they're willing to spend. And we've seen that before in Hex where people just love to buy expensive shit. This tweet goes all the way back to May 30th of 2022. So over a year and a half ago, I said, look at gold line is the stakers, blue bars is the price. The staker count goes up exponentially when prices are highest. That doesn't go up a lot when you're barely down here in the dumps. The market makers step in and set bottoms and push the price up rapidly to incite interest in the asset, to say, oh, there's something here. The retail market says, oh, there's something here that I didn't see before. And they're looking at price. They're not looking at the value of the code. I mean, you're asking a lot of people to do that. And that's called a Veblen good. Price goes up, demand goes up.
Yep.
Demand goes down. Most, like food, price goes up because of other factors, like everyone needs to eat and everyone needs a place to live, housing. So most goods go up, and then then if the price goes up high enough, demand goes down because people will just
because they're not speculative instruments.
But Veblen goods, this is why they can go up so high, is because they're luxury goods or they're like novelties, speculative instruments. So like the higher the price goes, the more demand goes up with it. Right?
Yeah. Price going up. I think people in the community are forgetting this, but that's the best way people got onboarded in 2020, in 2021. That's how I got onboarded.
Yeah,
was from price going up, seeing Richard's streams and going, okay, because if the price was going down 95%, I don't care what anybody says, people would not be as attached to this ecosystem. They wouldn't. That's the whole point. Richard knows that. I mean, I know he doesn't talk about price performance too much right now. And if he were to be directly asked in person, he'd probably just say, hey, man, we have to have more time to shake out the weak hands. You got to get over it. Like, man up and just get over it, right? Like, so you need to spend more time hanging out in the market and participating to be rewarded. But the point is regardless of timeframes being right or wrong, prices going up is where all the onboarding happened. It's where all the staking happened. Now, looking back, we realize it doesn't make sense from a logical point of view, but that's not how markets work. It's us humans getting psychologically attached to an asset as we see it go up in value and then deem it with whatever narrative we want to attach to it. Oh, Hex has already gone up 20x. Now I know it can do what it was supposed to do. Now it's doing what it's supposed to do. It can do another 100x, right? But down here, nobody's going to say this. They're going to go, this shit's dead.
Most people just hand off their supply down here at the lows because they're looking at this chart.
You can't do it.
Most people are looking at this chart and they're not looking at this chart. Or mentally, psychologically, they're thinking this, just pancake price action, and they've lost their $1 billion energy.
You see one big green weekly candle again, and just like we saw with
we didn't even come back down to retest.
Yeah,
we didn't even come back down to double bottom here. We did against ETH, it came close, but against the dollar, again, we're living in crypto land, guys. People are ratio trading. They're not playing against the dollar. They're playing against ETH and Bitcoin. If your coin outperforms Pulse, ETH, and Bitcoin, it's doing pretty good. And so I mean, here it is on a weekly. I got I outlined here bearish crosses and bullish crosses on the MACD here on the bottom. Like we had our bullish cross September 11th, I'm sorry.
Oh man,
Which is price was still going down, and then bam, you had the Alex the Whale thing. It came up the RSI from 30 to 60 in a week, and that closed up there, and then it's just been a nice retracement back to the mean right here in the middle, and that's what these blue lines represent was bounce levels before big moves higher, right? So this was from 10 cents to 20 cents. This one was from 1 cent to 12 cents. This one here was,
and those are bear markets. All these recent ones were bear market runs. Like
from 5
Hex was
cents to
doing
8
4 to
cents.
6 X's, you know what I mean,
Yeah.
randomly in the bear market when a lot of stuff wasn't doing anything.
There's a lot of people that traded this down too and made good money doing it. I mean, I'm not one of them. I'm more of like a buyer and holder, staker, but so a lot of people do like to trade, and there's been so much money made here, and they're not the ones talking. They're just enjoying the volatility. But yeah, we got a bounce here, and this is a bullish cross, and it's going higher. And I mean, this is kind of what we could see happening. Like you could see this thing break, come back to test, break down, go up. It doesn't. How this plays out in here doesn't matter, but just that this is what the next year can look like for us.
Remember with capital flow, right? Pretend like you're looking back. We see what's going on with Bitcoin, right? We see how when money is made in Bitcoin, that flows into Ethereum. And then, of course, our coins and every other coin in the Ethereum ecosystem typically bleeds out into either other layer 1 chains, right? Like pulsechain. But the point is as Ethereum draws more capital to it, right? People forget like that's how this works, right? Bitcoin moves up first, which again, I don't know why again the Bitcoin maxis are like, oh, we're dominating the BTC charts. Like you guys always dominated for a very short period of time. Every bull market, you lead, you dominate a little bit, and then you just get wrecked. Like this has happened every time. It'll be a different story if you destroy ETH the whole time and ETH does nothing. But we're already noticing that that's not happening. ETH has moved up with Bitcoin as it always has done. And as ETH has been moving up, Hex and our ecosystem have not moved up a ton, but a lot of things haven't moved up, right? It's all kind of moving in tangent with Ethereum, what it's supposed to be doing. So when you see Ethereum get close to kind of breaching that all-time high range, right, that accumulation zone that happened around 4,000, then you're going to see a lot of these ecosystems wake up. And then when ETH makes a new high, then there you go, right? That's when alts typically run up. And you can look historically at Hex when it actually started moving was when that happened. You know, so people expecting Hex to just go wild right now because some stupid meme coin did a 10,000x. It's like, guys, you want to go to like the gambling casino, you can do that, right? You can just do that in real life. You don't even have to be on the blockchain. You can just go to a casino and make that kind of money too. But the point is things timeline-wise have done nothing but make sense so far. There's been nothing that has been a surprise as of yet that I've seen. From a time horizon perspective, from how capital flows in the Bitcoin, Ethereum, and then everything else, everything's made sense. There's outliers, but there have been every season, right? There's always been outliers. You know, people have gotten lucky playing certain things in certain coins. You can't get too crazy going after that and ruin your whole position you've been building if you have for 2 years to just go after that. I mean, you know, if you got enough money, go have fun. But, you know, we're at the point where this becomes a lot of fun again. That's 100%. What I'm saying. We go up in 2024 or something really, really, really bad has happened. And I am not betting on that really bad thing happening.
Yeah. So so like let's play let's theorize about what this would look like if the market maker stepped in and did what I've been talking about, which is making Hex staking yields really, really attractive again. So the theory here is that with Bitcoin, you could see this dark blue line. That's the hash rate, which is how Bitcoin miners get paid. Is, you know, they turn on computers, and then Bitcoin's rewarded to them for solving blocks. The hash rate went up before the price did here. So the price was down here at sub penny levels, but the hash rate was continuing to climb because there was that initial spark of interest that, you know, people were willing to start mining Bitcoin, right, and to run the network. So then eventually what happened was that the Bitcoin price tried to catch up to the hash rate as it climbed, which reinforced more people to mine because the yield was good, which then got people buying and chasing the price, which made the yield even better. And then it's a self-reinforcing loop where hash rate goes up, price goes up. Hash rate goes up to chase yield, price goes up. Yields get better, people chase with more hash rate, price goes up even more. This is the Veblen good idea. And then you get the top, right, where the price crashes, it gets punched in the nose hard enough, and hash rate flatlines for a period as miners find new, more efficient energy sources, better equipment to mine with. This is like the repositioning period. price goes sideways, and then again, hash rates start to rise again gradually at first, and then the price just performs alongside of it, comes up, meet it, and look at this is the carrot on the stick, right? And that's I made this tweet to try to explain. This is what's going to happen to Hex is like somebody's going to come in here and put the carrot on the stick. The hash rate rising is the T-share rate and the yield that it's going to produce in dollar terms. So the share rate's always going to go up regardless, which is, let's see, where do I got that tab? Hexicans are no strangers to the share rate. Yeah, so the share rate's always going to go up no matter what as stakes end, but market makers can step in and pump the price to make real yields much higher and then absorb supply. So like, again, like what I was showing you the stair-step structure on Bitcoin where you make a stair, you come back, you retest the stair, you go up another level, you make a stair, you go up, you retest, you make a stair, you go up, stair, 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 and then you just retest structure on the price chart. And so what's going to have to happen here is market makers are going to come up, it's going to retest, go up, retest, go up, retest, and you're just going to continue to make those mining Hex mining yields better and better and better, and that's the meat on the bone that's going to keep new users participating and playing the game. Now, whether the faster it happens determines like how this plays out. Of course, it can take the longer it takes, the better, because the more consolidation, the more weak hands get out, and the more pressure is put. It's like think of it like a pressure cooker, and the price can just explode out of here, which would make like real yields insanely high, right? You could talking like 10x whatever you're seeing today, and most people have forgotten this part of Hex because they're too short-minded. But if I just pull up like a Hex calculator here, and say you had 2 million Hex, which is affordable at these prices, and you staked it for 45 days. I mean, you're only getting $117, right, for 12 on your 12 grand. But if this goes up to like 10 cents rapidly, now you're looking at your bag's worth 200K, but you're printing $2,000 every 45 days for a short stake. And in the beginning, this is what's going to weed out the weak hands, is because they're going to dump principal, which is going to create sideways price structure inside of here. So you're going to get the big move, and then you're going to create sideways price structure for like 6 to 18 months. And that's going to get rid of all of that wave of principal. And then once that's gone, they'll mark it up again. And when they mark it up the second time is when things get really interesting, because then these yields here get really, really insane. Because now if you're getting up into like that, let's say 20 cent per EHEX level, like a longer term stake, this is where like people start thinking longer because there's confidence building and sentiments coming back to Hex. And all of a sudden, like, you're thinking about staking for a year and you're looking at like almost $40,000 on your 400 grand bag, which you might have gotten for down here. You might have paid $12,000, but now you're sitting on a $400,000 bag, and all the other lettuce hands are out, and you're just looking at that like, well, I could just dump 40 grand a year, or like maybe 60 grand a year. But by now there's such confidence and buy pressure coming in to absorb and sustain and maintain that pressure, that's the little bit of sell pressure that's left. And I think it's a complex mathematical equation, but you got to run it in your head and think about how many people have been liquidated out over this period of down, and how high the price can go once things start to really pick up. There's a lot of sideline money that you can find on chain that's just waiting for the right moment to make something happen.
Well, we'll see if people last. A lot of people are not lasting. They think the only way to make money is being degens, which I get the sentiment mentality. I have nothing against people wanting to go out and gamble, but you've seen so many people fumble their bags over the past year now. And don't get me wrong, there's a very small percentage of people that catch things, right? Like PayPay or Bonk or whatever. But, good luck. I'd rather just provide value to the world and keep adding and, let things with real value and utility that actually create value in the blockchain space do what they're going to do. But I get it. I just think a lot of people, they're not going to be here for the move. And you kind of already see that with Bitcoin and Ethereum, man. A lot of people are not in Bitcoin and Ethereum. They're in stables. It's like if they can't even identify that there's an opportunity to make good money in Ethereum if you bought close to the bottom, how in the hell are people going to identify that alts are going to move? Right? They're so busy chasing nonsense 24/7. Like it's just clouded judgment at this point, which again, nothing against it. Doesn't mean you have to, like, a lot of people still have their main core bags and just having fun. That's different, right? What I mean is people have lost faith in the system, in the value of these assets. So they're unable to identify that enough time has passed and that things are starting to move up now and they're still sidelined or just chasing nonsense. And it's going to be sad because you're going to see Hex and these things take off and people are just not going to make anywhere near as much money as they should have, which is tough. I mean, dude, you've seen
Tough for them, but good for the market, right? Because those are the ones that would be dumping it.
Yeah, real believers are holding right now. You know what I mean? Like me and you at this point, I have to imagine we'd be called OGs at this point. Jesus Christ. You know what I mean? Especially because the original OGs did nothing. And people forget this. Like you're not an OG if you dump at the bottom. You don't, it's not in your best interest to ruin a price chart. Like even Richard talks about this. When Richard sells, it's near tops. He doesn't want to sell all of his Bitcoin bags at the bottom and ruin the fucking price chart. Yet we've seen like so many Hex OGs do that. You know what I mean? So we've purged so many people that didn't have strong enough hands, didn't have enough conviction, all these things, which is ultimately, like you said, good for the market. But I do think you're going to see a very disappointing bull cycle, not because of lack of price appreciation, but because of lack of conviction from the participants within it. That's what's going on right now.
Sounds bad for them, but good for us.
I mean, yeah, of course. But like we want everybody to win, you know? We want everybody to win. We want people to get into a better financial position, right? Oh yeah, this is good.
So dude. So this is cool because so this is crazy, guys. So this is that Benner cycle theory, and I actually put the hex chart on it, and I just drew a line up to where, and if we get to 2026 and that's the peak, like it's saying here, like let me dissect the diagram for you. So the top row here is years in which big panics have occurred historically. So Great Depression, 1929, World War II, 1945, 1965. We got off the gold standard there in 73, I think, so not too far off. There was a big period of sideways action. Some of the best times for Americans historically. And then 81, there was a crash. 99 was the dot-com crash. 2019, just 3 months later, was COVID. And then 2035 is the next projected crash. So then in the good years in 2026 is supposed to be a good year, good times, high prices, and times to sell risk assets. And then the bottoms are down here: years of hard times, low prices, and good times to buy are down here in the bottom. 2023, right here at the bottom. 2026, good times to sell. So what I'm going to do is I'm going to zoom in here and see what this looks like. So inside of here, look, Hex could literally just chop around between 3 and 5 cents all of next year, all of 2025, and then just in the end of 25 and 26 just rip straight up to like all-time highs and beyond. And this is what it looks like when you zoom in really closely on this chart. When you zoom back out, I mean, it's a tiny period of your life, but so many people are going to ruin their future in 2026 because they sell this period down here. Pretty incredible. So we're just here to try to warn you, like, hey.
Yeah, and I think we're lined up with 2024, 2025 being not as good, but like the run up into 2026 being good years to make money. So again, like at some point, prices are going to have to go back up, right? Whether it's halfway through 2024, 3/4 the way through, it's like at some point, again, people have to disconnect with the news cycle and all these things. Like notice like social media and news has never been more impactful than it has right now, with the dissemination of information and the lack thereof of truthful information and all these things. People are so heavily like manipulated by it, versus before. I feel like people would just kind of look at charts, right? More so. And we are kind of losing sight of the fact that just like enough time has passed and that these things are going to start doing what they're doing. So it's going to be interesting. Doesn't mean we can't have like a decent size pullback and then you get that solid technical pullback to start really loading the boat. And if people get that good entry point, great. Congrats to you for doing that. I think it'd be silly to continue to pause and wait in the sidelines over the next year or so. You know, it was a different story a year and a half ago. You know, we had thought there's different narratives, right? We thought maybe pulsechain was going to pump us to the moon or something different, but it wasn't. The whole market in its entirety was ready. Because when you looked at Hex, when pulsechain was getting ready to come out and stuff, everything else was in the shitter. Bitcoin was looking terrible. Ethereum was looking terrible, right? We just did not have enough time spent in the bear market at that point. There's no way a real systemic bull was taking place. And to some extent, you can have performance outside of that, but not long-term performance.
Imagine we get something like this where, because I got this highlighted comment up of 2026 is going to be a bad year. Well, what if Bitcoin just, goes up, tops, comes down, backs, crashes to my 32K level?
Yeah.
And then that's like end of next year, right? So we top here in March and April for Bitcoin, and Hex, let's say, runs up 10x, 20x inside of here by April, May. And then Bitcoin crashes all the way into 25, and then 25 opens and you get some sideways action. And then by May of that year, that's when we really start to pick up and go parabolic.
Yeah.
Right. So, and then, 26 would be a good year because you'd be selling the parabolic highs end of 25 and into 26.
Yeah. 25 could be a much shorter bear market, kind of what I'm thinking, right? Where it comes back down more of a V-shaped and it's not as bad. And then we start to head higher. But again, that's still a lot of opportunity. Like Bitcoin hitting and I think it's fair to say like Bitcoin could hit 60K, it could hit 80K. Like that's like what? Like a 20% range? Like that's not a big deal. You know what I mean? So Bitcoin is likely to be around those ranges, which means Ethereum is going to what? What is your take on Ethereum? Maybe it flirts with 10 to 20% above its all-time high, something like that. Something like that. And that means, again, if our ecosystem does a 10 to 20x across the board, I don't know, that's a lot of opportunity. You know what I mean? If you've accumulated enough, I mean, I don't know, 10 to 20x is embarrassing compared to 10,000, of course, depends on your time horizon. But, there's still a lot of opportunity in my point overall. It's just a lot of opportunity coming in this next year, 2024. Of course, people who hold longness are going to win, right? There's no getting around that. But if you are looking at 2024 as an opportunity to get into all these ecosystems, whether it's Bitcoin, Ethereum, Hex, whatever, again, like it's just like you're running out of time on our ecosystem. You kind of already run out of time on Ethereum, right? Buying here and you make what, a 2.5x? What do you think would be like a decent, safe macro top for Ethereum?
Dependent on the ETH gas upgrade. So I think if there's if there's some relief on gas prices, it can go a little higher. So 8K maybe is what I was looking at.
Yeah.
I
mean, that's not bad, dude. That's not. People are acting like oh, we're just nothing's gonna happen until 2026. Like last time I checked, Ethereum making a new high is doing something. You know what I mean? Like this is why we waited in the depression zone for 2 years to make a new high. It's like I don't get why people aren't more excited about this movement. You know what I mean? It's honestly kind of crazy. It's like that should be the most alarming part, is that retail and people in general are so psychologically just traumatized that they're not even getting excited about movement that would otherwise excite them back in the day.
I mean, there's also, there's nothing saying that we can't get something like this, which is going to shock a lot of people. But it's realistic though, is like where this thing comes up and double tops, let's say like right here.
Yep. Mm-hmm.
Or I'm sorry, a triple top kind of around that, 4 or 5K level, which is totally reasonable. And then this thing just doesn't make a new high for like a few years. I don't know if it goes out this far. This is saying that you don't make another high till 2028 and then 2029 and then 30. Like, wouldn't that be amazing? Where does that put us at on the Benner cycle chart?
I think if something like that were to happen, then there was definitely a deflationary hit to happen and something very bad happened to the system. Because that's where the macro picture comes in to help, because these assets do trade off of the M2 money supply and what the Federal Reserve has to do, right? There's two things they can do. They could either put us into deflation in a depression cycle, or they can debase the currency more, right? We're in the holding part of the rate hike cycle. So whether they hold for 3 months or 8 months doesn't really matter. What matters more is, do you believe that they're going to debase the currency again? If that's the case, there's no way impossible assets denominated in dollars stay flat or go down for another 4 years. Because we haven't seen that happen ever, right? And the worst crashes ever were back in the 1920s, and they've continued to get less and less bad from a time perspective and a drawdown perspective. So again, I'm just going off of historically and what the macro picture has to be. I could obviously be wrong, but again, if we're wrong, I think it just goes back into that. Do you expect a deflationary cycle to hit? Are they going to implement a deflationary cycle right now and bring in central bank digital currencies and all this stuff right out the gate? I don't think they're going to do it hardcore right now. I don't think the sentiment of the public is willing to take stuff like that at this point. I think a bit more inflation, all this stuff that's going to put pressure on the average everyday American needs to come in before some of these systems can truly be implemented to a public that's willing to accept them. from a psychological standpoint. But that could happen. I think what you have to keep in mind, what would have to go alongside of it, right? What would be the macro picture to allow Ethereum not to do that?
Quick thoughts on this was from here to here was a difference of 5 from here to here. So if you do just that was like the factor by the difference between this move to this move was a 5x
lower
was 5 less was a difference of 5, just the numbers. If you do that again, so if this was a 5,000% move divided by 5, that gives you 1,000% move here, which would put you around 10K. If it's just diminishing returns but the same momentum basically. So then that would put us at hold on one second, let me get a time or price range here. What are we looking at? So yeah, you're looking at 10K. Yeah, so maybe that's it, man. That's your target.
But to your point, right? Whether we get magneted up to 100,000 Bitcoin, because that's a round flat number everybody's gonna be talking about, and it traps people, right? Maybe it does make a new high, which would trap people more. Okay, it's going up there, and then it rolls over at 80, 85, 90. Does it really matter? Not really, right? Like you kind of know, like whether Ethereum hits 9,200 or 8,700, does that really matter? No, it made a new high. A lot of new money is coming into the other ecosystems, and our projects are going to move like fucking mad, right? Like that's something to get excited about, and honestly, just want to bring be prepared.
Some expectations we may have for. Well, here's Hex cycle theory. So new cycle starts every 4 years. This is theoretical. This is not actual. So the new cycle starts January 6, 2020. The 5th, January 5th is my target date. Big up, little down. And then the following year, big up only. The following year, down only. And then little up, big down. Of course, this had the pulsechain mainnet fork in there. So it might have kind of changed the data a little bit, because had we not gotten pulsechain at all, we may have topped here around 10 cents, and we may have only double bottomed here at 1 cent, and there would have been less volatility in the chart, potentially. But that's all theoretical. But here you go. So then this would be the beginning of a new cycle, January 5th, big up, little down, starting the cycle all over again. So again, it comes back to this theory that we're headed for some bigger move as we break this 21-day or this 200-day moving average, which brings me to the Mayer multiple data. So here's Bitcoin Mayer multiple pioneered by Trace Mayer. Anytime the price gets below the green dash line at the bottom, that's typically a good buy zone. Anytime it's above the red dash line, it's typically a sell zone. Now we can look at Hex on this, whether it's EHEX. It's EHEX is way above here on the green dash line. It's been consolidating along, chop, 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 broke through. Last time it broke through, it ran 700%. In the case of PHEX, it has been like up and down around it, so it's more consolidating around that buy range. And this is the beginning. This is the first time we've ever had PHEX data for this, but it's piggybacking off of EHEX's price performance. So it'd be interesting to see how this plays out. But what's really interesting is when you look at the combined HEX price, treating them as one asset here, and how we're cleanly above it. EHEX is really helping PHEX right now in this time.
Yeah, I mean, and look at we're an altcoin that's a levered play on Ethereum, right? We need capital to flow into Ethereum, right? Ethereum has to perform for capital to then come into our ecosystem, et cetera, right? So we're in that spot that most altcoins are at, where when capital does start flowing into Ethereum, again, like we talk about Bitcoin, these Ethereum targets, like, do you think we're really going to care if we look back at this and let's say December of this coming year, right? Me and you do another stream. And we're like, okay, well, let's look back at how this video aged, and Ethereum only hit 8,200 versus 9,200. Does that really matter that it underperformed a teeny bit? No, it was in line with expectations. And then what happened after that? All of the altcoins then performed like crazy, right? So like, I think people need to just really get in line with the momentum and the moves and the capital flow that's happening right now in crypto, right? It's painting a picture, right? Capital flow right now is painting a picture, and you kind of have to wait your turn almost. Like we've had moves in Hex outside of that. And of course, some big random whale come in and do that, but overall it will flow with general capital flows. And that's why you look for Bitcoin to do what it's done before. You look for Ethereum to do what it's done before. So again, whether Ethereum does 8,000 or 10,000, I don't think it really freaking matters. You know, if you're really looking for that big of a change, like 10%, 20% difference, then do you really care that much? You know, when we're in an ecosystem that could do 100x, right? No, of course not. But what matters is what happens after Ethereum gets close to its new all-time high. Capital starts to flow into altcoins. and we are poised and ready for a move, and everything's just kind of preparing, getting ready for that.
I'm telling you guys, do not get left behind. I said it before here. The thing ran 700%. It's at a better price now. You can buy either one. I don't care. You know, EHEX is the better buy, but do what you want.
I mean, shit, even if it's Ethereum at this point, it's like, yeah,
People are going to be lining up at 5 cents.
Oh, dude, the sentiment shift is going to be like everybody on stream. Pay attention to people who have been bullish the whole time, like me and Axis, who have never complained once. Like, notice you go to my Twitter, you go to his Twitter. We don't complain. We just quietly buy, and we understand what we're in, and that's it. Everybody's going to shift their tune big time. And the one thing you're going to see
when 2.6 flips a support, dude, it's going straight to 6 cents, like 5-6 cents, like this. Yeah, there's a hurdle to jump at 1.3 cent EHEX, or roughly 2.6 total. But once you clear that level, man, the floodgates are going to open wide. And if we get listed on Gate.io soon, shout out to Marlon with the pulsechain Foundation trying to work on getting these centralized exchange listings. That stuff's just going to like be a catalyst. And then at the end of this whole thing, as the legal stuff gets figured out, and you know, we're proven innocent, that this thing is going to just catch rocket fuel. And I'm just telling people now. Solana
has an active case against them, and they still did what they just did on their move, right? Like, Solana has active cases against them from the SEC, and they still moved, right? There's plenty of things with active cases against them with the SEC, and they're still moving. So, yeah. I mean, that aside, I do think the narrative that's going to really crumble all the like people that are talking about hacks and influencers are going to be the market cap shit. I'm beyond tired of hearing about market cap mattering.
Yeah.
I can't wait until we put up numbers again like we did in the last bull market where none of it makes sense. Because the market cap we had didn't make sense either in the last bull market. But we printed the chart we printed.
All right, what other chart was I going to show you? Oh yeah, this one you'll like. Let me scroll here for a little bit. By the way, I'm super active, guys, on Twitter. So if you want more information like this, please go check out twitter.com/axisALiVE. That's Hex. I got a pulse chain chart in here for the pulse chain fans. I'm just trying to find it. Okay, so this is if pulse chain price performance was to track what Ethereum did since the beginning. Assuming that, I mean, this is a little bit high because price did come down to test these levels. So let's just take off 30% from the projection. But this would have us at like 0.004 by by February of 25. And it could even go as high as like a penny, 1 to 3 cents going into like late 25 or early 26 if it plays out the same. So I think the safe bet is to play along this kind of a trend, as you see where I'm like dragging my cursor. And you could expect by 2026 we might be at 50x, 100x levels. There's going to be a lot of fun stuff that happens. Like I get bullish on like the fundamentals right now more than anything, because that's what kind of sets the trend. And when I'm talking fundamentals, I'm talking about this kind of stuff where there's people that are building tons of cool stuff.
The second cycle really confirms the validity of not only at this point the ecosystem, but the coins themselves, right? Like ETH did a big run, but the big question was could it do it again, right? The repeat. And
you won't know until it's too late. So either you're in the bus and you're on, or you're strapped in, or you're
contrarian investor, right? Do you want a 2.5x in Ethereum? You're not contrarian, but it's probably a safer play, right? Which again, it's like that's still going to do better than your house. That's going to do better than gold. Like you're still winning, just nowhere near as hard. But we all
know,
like,
internet versus cryptocurrency versus Hex right here, man. This is Hex down here, just fucking tooting along. Got 100,000 stakers. It's not even on the map. Cryptocurrency is right here as a whole in 2021, and the internet adoption rate. So once regulatory clarity is here, how can you not see cryptocurrency just kind of tracking the growth rate of, even if it's at a lower degree, but still tracking? Like this is 1,000x from here to here, right? You get that first billion, if you get 1 billion users, right? In crypto total, how much of that do we capture in the pulse chain and Hex space? Or the Ethereum and Hex space.
Yeah.
Pick your
you got to ask
poison.
yourself, when all this money comes in Ethereum and you have new users onboarding. I talked to a younger kid the other day. He's 18 and he's getting onboarded into cryptocurrency, right? And like he doesn't have those preconceived notions or the history of the bear market or anything like that. It's just new, fresh mindsets coming in, seeing the opportunity, wanting to get involved, wanting to code, wanting to create projects, whatever. And we can't get too caught up with that get off my lawn attitude, right? Because we were contrarian investors. We opted to be into an ecosystem that has been hit largely the hardest out of any coin ever, outside of maybe like the ones that have been stuck in SEC lawsuits for a long time, like Ripple. But even then, like that's where all the gains are, being contrarian, right? So that's where it's like, hey, get involved, period. Because again, if we don't go up in 2024, there's much bigger issues at play. We'll do another stream and we'll go, hey, we got that deflationary hit. The Federal Reserve is screwing everybody, and a lot of people are out of jobs. So crypto really doesn't matter right now. That will probably be the stream that me and you do, if that's the case, which is not ideal. And again, look at the Fed's track record, look at what they want to continue to employ, right? An environment where middle class and lower class are not going to riot and revolt, and upper class is able to kind of retain their lifestyles and stuff. Like, it's not all good and roses and rainbows, but you got to use your logic here and go off of that and go, what's the most likely scenario to be played? Because it's not like we're at groundbreaking levels of dissent in this country right now. It hasn't been great geopolitically. It's not great, but there's a lot of room for this system to continue, and that is going to continue to embarrass the perma bears, and they're going to continue to just miss out on assets that appreciate quite hard.
I mean, I'd be a perma bear more if I was measuring things against Bitcoin and ETH, because that's actually showing you perma bear type shit. But when I'm measuring against the dollar, I don't feel too perma bearish on anything.
No, of course. And that's ultimately the only thing that matters right now, until we swap off the dollar to doubloons or bananas or whatever, right? That's the unit currency of choice that we provide value to because of our political system in America and our military, right? Those are the only two fictitious things right now that are like holding value to the dollar. Then like the second we swap to something different, then the conversation changes entirely, like when we got off the gold standard. But do you guys really think the gold or the dollar is going to just totally poof out of thin air in a couple of years? No. Maybe 10, maybe even 5, but I don't think it's happening over the next couple of years.
So I got a chart here. I wanted to go do a play-by-play on the TA here. Going back to when Pulse launched. This is EHEX. EHEX on the Pulse chain. So there was the rip, the drop. This was resistance, breakdown. Put into like a bear flag. You could draw it like this, bear flag. Breakdown, retest, breakdown. So that was a clear bear flag, or on the longer thing, it was a bear pennant. So it was a bear flag inside of a bear pennant, because it was downwards price action coming into the pennant, break down to the next level. And this can all be measured out. If you measure from the peak to the drop, and then you drag that down to here, you can measure, look, it was almost the same distance to where you can measure this stuff out from a technicals. And that's a lot of what I do from the group, but axisALiVE.com to check more about that. But so inside of here, what do we had for this breakdown play-by-play? We had a couple bearish patterns overlapping. So resistance, support, break of support, measured move into a falling wedge. Falling wedges are bullish reversal patterns, signaled by this bullish cross here on the MACD. Started to form a base, ping-ponged around. Second bullish cross on the MACD, signaled big upside. Got a 3x move on EHEX. Got above what was previously resistance as support. Alex the whale exits. Price tanks below. Posts up into like a pennant pattern, which is a neutral pattern. This is a legit pennant. With a little bit of weakness on Pulse, brings it down slightly lower. Forget the exact fundamental thing that happened here. There was something that happened. And then ever since then, we've been actually consolidating here as support inside of this bullish pennant now. So like this has been consolidation right here underneath the 111-day moving average. We're coming up to test this resistance. If we get above that level and grind, we can like basically pop off that level and go higher. So what am I seeing here? I'm seeing where'd that go? 1 second.
Alex the freaking whale.
I'm seeing another bullish cross that came in here. So major bullish cross here, 300% move, another bullish cross here, some deep green prints on the MACD bars here coming into this resistance line. So if there's follow through on that we can totally see this EX price going higher. So EX might actually carry the weight of the entire ecosystem here, potentially. What else is coming in? I mean, there's a lot of other. Here's that 111-day moving average consolidation below it in an uptrend, positive slope, trying to flip that as support. The longer the better. This is like a squeeze pressure cooker. So the longer the better, and then it's going to break hard to the upside. PHEX is just going back to retest the 21-day moving average as support here against the dollar. Totally normal. Bullish cross on the MACD already came through here on the 15th. This is just chill mode, lazy dog mode, coming back to test that as support. If it fails, I expect this lower trend line to hold, W bottom and rip. So that's all looking good. And then combined hex price is actually bottom now against pulse. So you got the bullish cross here on the MACD, here on the daily, right here. Potential bottom here on the combined hex price versus pulse. And this would actually ultimately lead to just a massive W bottom here, where this thing's going to come up and test these highs again. And you could be seeing a combined hex price going to 400 to 1 pulse per combined hexes. So definitely bullish looking price posture from the hexes. At the same time, pulse is looking really good as well. It's up here above the 21-day moving average. Actually, this is the 21 daily, which is the bull market support band. And a lot of bullish things have come through. Bottom on the stochastic momentum, bullish cross on the MACD, break of this downtrend, resistance on the RSI, and now it's just lazy dog, just chilling. Price is just chilling, and it's just a weeding out period before that next markup, coming back down to retest that 5.8 level, or the 21 daily moving average, which is rising on a positive slope. So there's a lot of good bullish things happening in pulsechain right now. Don't fade it. And we'll talk more about this on Wednesday when I'm live with Zero Crypto, who's a TA goat, and he always posts his analysis up for free on Twitter ahead of time. But we'll be talking about what's been going on the Ethereum side of things for both EHEX and for in the terms of the LP pools, and as well as Pulse against ETH on the ETH side. So there's definitely some signals coming in over there as well. Last thing I want to talk about before we wrap here pretty soon, I've been going for an hour and a half, is I wanted to pull up the Axis chart and kind of talk over that for a second. So here we go. So many of you may know I stealth launched a coin back on July 27th. It was the axisALiVE rewards token for members at axisalive.com. And ever since December 6th, the price has done hockey stick pattern here on the daily. Currently, the price is up. Big green candle this morning, 530%, and it's coming in to test the highs. There's about $238,000 liquidity here on the Pulse X V2 pair, Axis Pulse. If you pull out to the logarithmic, I mean this is probably the best looking chart on Pulse Chain in terms of just like the growth and the price action. I can't even believe to say that in watching the chain that there's been guys that have actually sold for a loss on this chart, which is completely amazing. I don't know how that's possible, but look at how picture perfect technically this thing bounces off the these key Fibonacci levels. Just bam. A couple things. there was watching the chain here over the last few days. The guy that sold this candle down was the same guy that sold this candle down. And then he came back in and he unloaded his last coins right here. And then the price just left it behind. And we've had nice clean retests of each fib level on the linear scale here. 3 of them. And yeah, I'm insanely bullish on this thing. After looking at the chain, there's just, I mean, if you want to see for yourself, like, it's all on the website. There's if you go to axisALiVE.com and hover over the Axis token chart, click market supply, you can see all of the chain data. It's transparent. This was last updated today. You can see the different leagues, distribution of coins, the market supply, total holders. This does not look accurate. I think it's down a little bit from where it should be. So, of course, this is always take it with a grain of salt because sometimes the data gets thrown off. But Crispy does a pretty good job of lining all this data up for us. And then here on the, I get like a mega dashboard, so you can see like the total TVL, liquidity, volume, price against Pulse, price against USD, which brings me to my next point, which is against Pulse, there's not really anything else that's performing quite as well. It hasn't quite made a new all-time high yet against Pulse. It's got 32% left to go. But I'm tremendously proud of this asset and being a part of it with you guys and the price performance. It's really a testament to like the holders of this asset. There's a lot of the predatory guys seem to have gotten out or been doomsday their way out of this asset. So yeah, I just wanted to bring that up. Make sure that everyone's aware that axisALiVE token is here to stay.
I mean, you're also in an ecosystem that's brand new. It's not going anywhere. So arguably the best time to get in is at the end of the bear, which, again, whether people want to psychologically admit that or not, is probably 95% of the problem right now.
Yeah.
Because everybody I talk to that hasn't experienced a 2.5-year bear are ready to go. And that's merely a change in their sentiment based on prior experiences, right? So
I think a lot of folks are waiting for confirmation from Richard, right?
Another stream in 3 months at the end of Q1, falling back up on Ethereum, Bitcoin. Calling right now. We're going to be either very, very close or at all-time highs within the first, I would say, 3 to 4 months.
Oh, yeah.
Calling it. I think we have like a 60-70% move of ETH within the next 3 to 4 weeks. And then from there, sentiment really shifts. And then you see more of that bullish attitude hit everybody, even the doomsdayers. So, again, could this cycle really underperform and disappoint people? Yeah, but again, like, we're not in Bitcoin and Ethereum to make a 20x and be disappointed. Right, we're not in Ethereum to hold for dear life for 10,000 and we have to hit 10,000. Like, no, we're smarter than that, right? Let retail be the people to buy Ethereum at an all-time high and hope that it goes to 10,000 so they can make close to a 2x. Like, we know that that's not a good mentality to have, right? So that's what I think would be a good idea, man. Now that we're getting into the fun part of the season again, doing streams more often if you're open to it in like maybe 3 to 4 months and revisit some of the things we call it. Because we made some pretty bold claims here, but I think we're in a better position to make these bold claims because enough time has passed.
Well, we were right last January, and I intend to be right again. So, man, it's been a pleasure. It's been a nice long stream. I hope everyone enjoyed. It was packed full of information. I have some announcements here. I got 7 streams planned over the next 3 weeks. I'll put a tweet out in the next few days. But most coming up right away is tomorrow night, Monday night, we have our private session with axisALiVE.com boardroom members. And then on Tuesday, I'll be live with the Creed of Crypto, Ewok and Broke Boy. And we're going to go through like a really long, really well-curated list of questions and analysis to go deeper into some of the questions they have about the ecosystem. And then on the 4th, Thursday, I'm with RH Max talking about how to make passive income in crypto. And then on the 6th is the Hex Conference. So I hope to see all you guys there. Ryan, I appreciate you so much for joining me this morning. We always do good work. And best of luck to you this year. It's going to be a good year for altcoins.
Yeah, man. Appreciate you, buddy. We'll be back on soon again.
All right, y'all. We'll catch you on the next one. Peace.
See ya.